But let's pick up the conversation now. We've got Matt Orton joining in on the show right now. Matt, hi, good morning. Good to have you on the show. And it seems like Trump is ready to talk, and he's ready to talk with China as well.
Hey, good morning, Aisha. It's very true. It's nice that Trump is willing to talk, and it's nice that it's been broadcast to the markets. And the big rally of relief that we had on Thursday was, I think, the fact that we're really removing some of the more dire left tail scenarios of risk away from the market, because I think we can have confidence that absent retaliation from other countries outside of China, we probably are seeing the peak tariff rates for the rest of the world, which is a good thing. It gives a little bit more certainty, but the challenge, and I think the pullback that we had today is reflecting that there's still a lot that's unknown. And it's still a very, very difficult environment for business investors, for CEOs and managers of companies to be making investment decisions in this sort of market environment. So we're heading into earnings season. The big banks kick off tomorrow. And I think that's going to give investors a very, very good sense of the underlying strength from where the US economy is actually coming. So at least we know that as growth softens, it's definitely going to soften. The question is how much due to some of the tariffs. And I think we'll get a good sense of where that base is, how much sentiment has really been hit with respect to the consumer in the very, very near term. And I think that can help us level set our expectations as we get into the meat of earnings season.
Okay. So Matt, 90 days, tick, 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 tock, tick, tick. What should we expect?
Well, yeah, TikTok for sure, considering that's also key bone of contention. But yeah, Matt,
90 days,
thoughts?
something on tick and something on talk. TikTok, something you will hear.
So it's very true. We'll see what actually happens to TikTok itself. They keep getting an extension too. And I think that fate is exactly what we're going to continue to see. I think if whatever we get done in 90 days, we'll certainly make announcements would be my base case as you start to make progress with respect to negotiations. And if we need to have another 90-day reprieve or a 60-day reprieve, whatever it is, I think the can's going to keep getting kicked down the road, because there's a lot of other legislative priorities in the US too. We have tax legislation that has to be passed before the end of 2025. Otherwise, we reset to the pre-2017 tax levels. That is a top priority for Republicans. And so the distraction really of tariffs at this point is not helping their case with respect to getting that through. So I think we're going to continue to see these pushing of tariffs down the road. And ultimately, while that injects a lot of uncertainty, it's going to weigh on growth. It still helps avoid worst case scenarios. And I think at that point, investors will be able to assess and let the dust settle and actually start to pick up the pieces of high quality companies that have been thrown out with the bathwater. And there's a lot of them that are out there in information technology, across communication services, even in healthcare. There's a lot of companies that I think investors want to own. I've spent the past week or so really nonstop talking to clients, engaging with them, urging them not to sell, but also to be very reticent about buying the dips at this point. But I told them, get your shopping lists ready, because once we get out of this, once we get a little bit of clarity, I think you're going to start to see the micro start to separate from the macro, at least a little bit.
Okay. So Matt, the script of how markets will move, will that be now influenced by bond, currency, or it will still be equities?
It's going to be all of the above. I mean, the bond yields are very, very important. And frankly, I think it was the spike in bond yields that really caused the president to back off some of the tariffs. I think that really tightening of financial conditions and disorder that you were seeing in the US Treasury market, that to me was the ultimate reason why we finally saw a pivot from the president with respect to the 90-day reprieve with respect to tariffs. So I think bond yields are going to be very, very important. They're important for the economy. They're important to the president's base, much more so than the equity market. So I would expect volatility across all asset classes is going to come in from the highs, but it's going to remain very elevated just because of the level of uncertainty. And as a result of that, I talked about getting your shopping lists ready, but another key piece of this, when you do get big rallies like we had yesterday, if you are a client and you're not happy with your asset allocation, you think that there's still areas that you could put into your portfolio to look to hide out from some of these tariffs, India being a key market that I've really been encouraging investors to look at after the big 15% pullback, there's a lot of things that you can do to take some profit, or at least take a better exit point when you get a big update, and really start to think about, am I properly diversified across asset classes, across sectors and industries, as well as geographies, which I think is going to be increasingly important given what's happening in the developed world, in the US and China in particular.
Right. Matt, so good having you on the show. Thanks for your time as always.
Thank you.